Ladies and gentlemen, may I now invite the following dignitaries to the dais. Shri Sunil Mehta, Chief Executive, Indian Banks Association. Shri T.K. Rajan, Chief General Manager, Department of Supervision, Reserve Bank of India. And Shri A.G. Giridharan, General Manager, Department of Supervision, Reserve Bank of India. May I now request Shri Gopal Murli Bhagat to present a bouquet of flowers to Shri T.K. Rajan and Shri A.G. Giridharan as a token of our love and respect. May I now request Shri A.G. Giridharan, sir, to share the overview of SEWA portal. Over to you, sir.
Dignitaries from IBA, CGM, Department of Supervision, Reserve Bank of India, banking fraternity friends, dear colleagues. Good evening, everyone. I'll just give you a brief background about the contextualization of why we are here to discuss about this particular portal. So, as you are aware that we do receive a daily reporting of downtime from the banks for their CBS, mobile banking, internet banking and other things. And we are monitoring it on a daily basis to see where is the downtime and then why there is a downtime, what is the root cause and all. But broadly, to give a perspective, so in the last 1 year, if you see from say April 23 to March 24, banks have reported say nearly 200 instances of nearly approximate, I would say, planned downtime for CBS and nearly 300 instances of planned downtime for mobile banking, and for unplanned for mobile could be around 130 to 150 and around 50 for CBS. And nearly 77% of the downtime was sort of falling under the less than 2 hours bucket, and around 18 to 20% in the 2 to 4 hours bucket. More or less, we can say it is similar for CBS and mobile. That means the number of instances and then also the total hours of downtime, be it planned or unplanned, it was on this range. Now, for a customer, he is not aware about why there is downtime, whether it is planned or unplanned. It is a service disruption for him. The reason behind that is not material for a customer. And so we thought that many times you also would have witnessed, we are also witnessing about sort of a social media bombarding about that type of downtimes. This service is not available, that is not available. And then, then we try to get into the root cause and why it is so. And maybe to avoid this or to at least minimize this, we thought that there is a necessity for us to make the downtime in a more transparent manner to the public. As you are aware, the global cloud service providers do have certain sort of status of their services. They transparently make it available on their websites across different services and different regions that they provide. A similar thought was sort of conceptualized to see whether can we also have our banks to sort of report in a seamless manner their downtime of critical services, and then make it transparent to the public. And it serves more than one purpose. One is definitely a transparency for the public to know that, okay, is my system down, or is my mobile phone is not available, or is there a network connect issues at my end or at the servers and banks and things like that. Number two, it also tells banks as a collective, collectively they get to know about each other, and then it sort of creates a positive competition and positive motivation for them to sort of keep their systems up, because operational resilience is today's buzzword, and we know that yes, our systems have to be up, particularly for the digital services that we are providing on a 24/7 basis. And third, it also gives responsibility for the third party service providers with whom the banks are dependent on, and then it gives them sort of a reputational incentive, I would say, for keeping their systems up, for to maintain sort of strengthen their monitoring of their systems, the capacity, system upgradation, things like that. So in this context, we thought that this could be a good initiative if it is taken up by IBA. In November, we communicated to IBA about this type of initiative, and then just asked them to discuss with some banks. And then we had initial discussions, and I understand there are 10 banks who initially participated in the first phase, and then 9 banks, I can just say Axis, Bank of Baroda, Canara Bank, HDFC Bank, Airtel Payments Bank, Fincare Small Finance Bank, ICICI Bank, Kotak, Mahindra Bank, I think, and PNB. They are sort of ready and then ready to go live today. And I understand SBI has already started their development, who are in the phase 1, and they would be shortly, at least by this month end, would be sort of joining this first phase of this portal. And subsequently, once we see this, more banks would be joining this, and then maybe in a few months' time, we would ensure all the banks participating over this portal. And this has multiple advantages, and it will be easier for us as well as for you to monitor the digital uptime, and also maybe reduce your downtime reporting directly if this becomes very seamless and efficient. That is what we are envisaging also. So I think with this background, maybe the next, I think OPL would be sort of the vendor who has developed this. They would be doing this, and I wish all the best for all the banks participating in this. Thank you. Yeah.
Thank you, sir. This is truly enticing for the entire financial ecosystem. I would now request Mr. Janik Shah and Maulik Shah from OPL to kindly come on stage and present a demo on SEWA, please. Thank you.
Good afternoon, all. First of all, we at Online PSB Loans thank IBA and RBI for providing us an opportunity to build the SEWA portal. A special mention to SEWA Phase 1 banks who extended their support to make this live in last 4 to 5 months. So what we have done is that we have prepared a small demo so that all the members present here can have a look and feel for how we have built the SEWA portal. So can we have a demo? Yeah.
Welcome to the SEWA portal, an initiative by the Reserve Bank of India and Indian Banks Association and member banks of IBA. The portal is designed to display the real-time and future availability of essential banking services such as internet banking, RTGS, NEFT, IMPS, UPI, mobile banking, and other services of partner banks. The objective is to provide transparency and reliability. Customers can now check the service availability 24/7 before making crucial transactions. It will display the real-time status of services via 4 icons. Service available. This means that the service is active and fully operational. Service unavailable. This means that the service is not operational right now. Status unavailable. This suggests that the service status has not been updated. Scheduled downtime. This icon shows that a particular service with respect to the bank will undergo maintenance and will not be available during the specified time. The SEWA portal empowers customers with crucial information about digital services availability, enabling them to make planned financial transactions, thus promoting transparency in the financial sector, building customer trust and confidence. On clicking the arrow icon near the bank name, customers can view the details of all services of any partner bank. Consumers may use the arrow indicator to assess the effectiveness of each digital service, and a pie chart displays the service availability of each service over the last 30 days. Additionally, customers have an option to view the service status of any given day, hour, or minute during the last 30 days. This ensures the effective management of customer expectations during service outages and downtimes. Experience the power of seamless banking with SEWA, keeping you informed every step of the way.
Thank you, Mr. Janik Shah and Maulik Shah. Ladies and gentlemen, may I now invite and request Shri T.K. Rajan, Chief General Manager, Department of Supervision, Reserve Bank of India, for delivering a special address to the gathering and to soft launch the SEWA portal. Welcome, sir.
So, good afternoon, everyone, and Chief Executive Officer IBA, my colleagues from Reserve Bank, and my colleagues from the banking sector. I'm very glad to be here today, and very glad about the SEWA portal. As Giri said, we took a cue from the cloud service providers who provide a dashboard regarding the availability of services. And Reserve Bank is extremely focused on ensuring transparency in the availability of digital banking services vis-a-vis the customers. And that's why we brought up this idea. And hopefully this would not only bring in transparency, but also maybe promote a bit of a friendly competition among the banks, and probably they also become more aware of this issue. And oftentimes when you talk to banks, one of the common refrain is that whenever there is a service outage or a degradation of service, the first reaction is that, okay, it will be all right in the next 10 minutes, 15 minutes, 20 minutes. So you tend to delay informing the customers proactively, and that causes a lot of issues. And hopefully with this, possibly we will have increased transparency, and customers exactly know when they're trying to do a transaction, they're not getting through, they possibly would be better informed about this. So that is something which, and the name SEWA is of course an invention of my colleagues. Regulator may not always be the best set of people to invent names, so you are free to change and provide a better name if it suits you. I thought with that. So what I really thought I would do is I think I have about half an hour's time. I also wanted this to be a little interactive towards the end, so probably I can take some questions or comments or whatever it is. So I'm glad about this CISO summit, and I think it's the second summit that IBA is organizing, and hopefully there will be many more summit in the days to come and the years to come, and that only shows how far the CISO function has developed or evolved in the banking sector as it is in other sectors, because this is probably one of the newer C-suite functions in the industry, not just in the banking industry, across industries. And I would imagine that the CISO function has maybe graduated from being a pure IT enabler, somebody who only looks at problems or trying to invent problems where there is none, to somebody who is more of a business enabler, right, who also understand business, who is also a friend of the business, and also who actually is more involved in strategy, especially in regard to cybersecurity strategy in the banking sector. Gone are the days when CISOs probably will struggle to find a place on the high table, as it were. And gone are also the days when CISOs often struggle to get a budget passed. Today, everybody knows about the importance of cybersecurity, and hence, today, no bank will say that I will not set aside adequate resources in terms of budget for the cybersecurity function. But along with that, of course, the responsibilities of CISO also have gone up manifold. The threat attack surfaces have gone up tremendously. Today, we are no longer talking in terms of when something will happen, or rather, if something will happen. We are thinking in terms of when something will happen. So, response and recovery, assume breach, those are the buzzwords. So, the increased responsibility of CISO is clearly there. And I just wanted to point out something which maybe I can elicit a response subsequently when your turn comes. And that is that in banking, we have this very clear distinction between operations, risk management, and audit, the assurance functions, right? So the CISO function is clearly slotted in the second bucket, which is the risk management function. But today, if you really look at the world, the way the CISO's role is getting evolved, not just in the banking sector, but across the globe. So one thing is that, I was told in UK, there are many banks which junk this concept of CISO being a second line of defense. They are kind of more aligned to the first line, or they are kind of ensuring not only prescribing policies, prescribing control, but also helping the CTO or the CIO in fixing problems. I really don't know. And there are private sector entities outside of banking sector where there is concept of dual hatting, where the CISO and the CTO is one and the same person, right? And I've seen some articles which also talk about how and why a CISO is better suited to become a CTO going forward, because the security is hardwired in his thinking. So he will be a good candidate for the CTO. So the world is changing. So whereas we have come out with the latest guidelines, I think in April 2023 about the IT governance, where you clearly laid down in some detail as to what a CISO function should be, what a CTO function should be. I'm not sure. I mean, we are all open to changes. So I would like to have your views from your experience as to how we should go about this. But when people talk in private to me, many of the CISOs, they still talk about how they find it difficult to, how they are often seen as somebody who is a showstopper rather than a business enabler. I guess there has to be evolution both sides. On the side of the CISOs to be more of enablers and try to understand the business and trying to help them out, as also an understanding on the sides of the people on the business side that CISOs is an essential function, so that appropriate guardrails are put in terms of technology and its implementation. So this is something that I really wanted to maybe mull on. And from a Reserve Bank's point of view, I guess we also played a part in improving or enhancing the role of the CISOs, especially in the smaller organizations, smaller banks, when I say. And also we're given a range of options. For example, in small banks, I'm talking about cooperative banks. I believe some cooperative banks are also here. We have not really mandated a CISO except for the level 4 banks, which are more akin to commercial banks. We only have mandated a function. So you need not have a CISO, but there should be somebody who looks at the CISO function. So that's way. And then we also have, based on demand, of course, we have a CISO forum in existence. The regulator has generally kept away from the CISO forum for obvious reasons, so that I hope it's doing well. I'd like to have some feedback from all of you. And we also formed a CISO function, CISO forum for the larger UCBs about a year back, I think a year and a half back. And very recently, last week, based on demand from the NBFC sector, we also have a CISO forum for the NBFC sector as well. So this is from a CISO's perspective. So what I would like to focus on the next maybe 10-15 minutes, talk a little bit about regulation. And one of the things here is I look at both regulation and supervision. This is one area where regulation and supervision is done by the same group, because this is more of a specialized function. So I would like to briefly talk about some of the regulations, the way the regulations evolved, and what to expect, probably, which is more of interest to you, what to expect as we move forward, say in the next 1 year. And also from a supervisory perspective, how the supervision has evolved, and what to expect again in the next maybe 1 year, because this is a constantly evolving area, and we also need to evolve as you evolve and industry evolve. So talking about regulation, so there are two broad approaches to regulation in this area world over. And the one approach, maybe by the European Union, the Bank of England, they've adopted is to look at cybersecurity as part of the overall operational risk. And all the cybersecurity regulation supervision are ingrained in their operational risk management mitigation activities. There is another set of regulators, like India is one, the US is another, where you come out with a distinct set of regulations for cybersecurity and distinct type of activity in terms of cybersecurity supervision. There is nothing to say that one approach is better than the other, but both approaches are evolving. But some of the emerging areas of regulation I just would like to flag, and what we are trying to do maybe in the next 1 year. So one thing is principle-based versus rule-based. This is often talked about by all of us, not just in cybersecurity area, across, and how regulators should be moving towards a principled regulation as the organization matures. I think this is one area, at least from a RBI's point of view, I think like in many of the advanced countries, our regulations are largely principle based. I hope you agree with me on this, except for certain very specific areas because of specific instances. For example, SWIFT related guidelines, which are very granular in nature because we have some instances of issues. ATM security, ATM switch related guidelines, which again is a response to certain large incidents which has happened. But barring those, our regulations are very principle based. And in fact, I feel that there are areas where we are less granular when compared to even some of the advanced country regulations. I can tell a couple of examples. So one of the key areas of regulation, the area of cybersecurity, is all regulators have come out which is on the issue of the third-party risk management. This is given the role, the critical role which third-party service providers play in this area. Most regulations have come out with very copious regulations in this area. I think European Commission regulation that's about runs into more than 100 plus pages, which is copious FAQs. You have some of the regulators like the MAS, for example, they want the banks to every half year give an inventory of the major third-party service providers the banks provide. Very interestingly, they also say that they have the right to ask a bank to stop services in respect of third-party service provider if they think so. We really have not gone that far because there's some legal issues involved. In one of the recent incidents, which was many banks were affected because of one specific very large third-party service provider, we did think about this idea of can we ask the banks not to take any additional service from that particular third-party service provider till such time they do what they're expected to do. But then the legal view is that no, we really can't do that. We really can't do that kind of a thing at least at this stage. We really even can't ask the banks not to take the service from that particular entity. So we took the next best option, and that is essentially that we have invoked this concept of the pooled audit. I think the IBA has come out with the framework for the pooled audit some time back. We've taken a lead bank, we've taken a few other banks, we have framed the terms and conditions, we have gone ahead, the audit is on, and once the report comes, we'll see what needs to be done. But the point is the third-party service provider is a very, very critical area going forward. And this includes the cloud service providers. And there is a need to have much closer regulation, supervision of those entities also. And the trend around the world is, in US, for example, they come out with what is called as Banking Companies Services Act, BCSA, where the regulator has armed itself the powers to call for return, supervise the third-party service provider, including the cloud service providers. So is the case of DORA, the Digital Operation Resilience Act of the UK. We have not really gone to that extent, but we are in talks with the government because many of these providers are providing service not just to the banking sector, but across in different industries. So we were of the view that there has to be an overarching policy backed by legal mandate for the government to have a much closer control over these service providers, and in turn, they can delegate some of those powers to the respective regulators. So we are working in that direction as far as this area is concerned. So that is one area of development, what is happening in other countries and vis-a-vis what's happening in our country. Again, talking of cloud adoption, there are regulators which has come out with very, very detailed guidelines on cloud security. I think HKMA is one, MA is another. We have not done it. We are just, ours on cloud adoption is just a half page in our third-party service providers guideline. I think there's a lot of requests from many banks that can we have much more granular guidance, and we're just seeing whether that can be done. And the same goes for API security, for example. Singapore Monetary Authority has come out with very detailed security guidelines for secure development and integration of APIs, and we are not done that, and that's an area possibly where we possibly will do something. An area where we are quite relaxed when compared to the other regulators is in respect of incident reporting. our guidelines, of course, there has been a bit of tightening of late. I think a couple of months back we issued some guidelines, but our requirement is that any incident which qualifies as per the guidelines should be reported to us within 6 hours. Abroad, Monetary Authority of Singapore, for example, you have to report within 1 hour. In European Union, it's just 2 hours. We are 6 hours still. I think we have a lot of requests from banks, and we're still not getting those incidents reported to us within the time. Sometimes that's an extreme case. We come to know of this from the press, from outside, and that's certainly something which should be avoided. When you talk of incidents, we talked about downtime, and that's an area where you can expect some kind of expectations, baseline expectations from the regulator. And that's something which is in vogue internationally. For example, again, when you talk the example of Monetary Authority of Singapore, their guideline says that in respect of critical applications, you're not allowed to have more than 4 hours of downtime for each application per year on a rolling basis. And I think similar thing for the European Union, 2 hours of downtime for critical applications for a period of 6 months. We are not really prescribed any because we thought we are not really prepared. But now we are actually in the process of possibly drafting something, and that is something which you can expect maybe in the near future. Another guideline, of course, on BCPDR is an area which all of us, we have come a long way. We improved quite a bit. Again, this is an area where some of the regulators have put a very, very granular guidelines. For example, Singapore, for example, they tell banks even scenarios in the guidelines. Say they would like you to test your systems with minimum number of resources, assuming that there's a problem with resource availability. They expect you to test your systems without a key third-party service provider, called reactivation. They expect your BCP framework to be done through internal audit to be done on a periodic basis. They've gone a very granular with some other regulators. We have not. So these are areas which where one area where maybe banks are expecting some regulation in the adoption of AI, where again various regulators have come out with various kinds of guidelines. For example, Singapore has what is called as what is that called? Fairness, accountability. What is that? FEAT, F-E-A-T, Fairness, Ethics, Accountability and Transparency Framework. And for each of those, they have come out with a kind of a framework measuring each one of those. UK has come out with a much more very generic guidelines, looking at the data, looking at the models, looking at the governance, and giving some high-level principles in each of those areas. We have not really come with any such guide. One of the Government of India authorities, I think the Department of Telecom, one of their research, they come out with a methodology. Maybe some of you have to measure the fairness of AI model. But so this probably is an area where maybe Reserve Bank will come out with something going forward. I think I've covered most of the areas of in terms of regulations. Now, in terms of supervision, I think that's the next area. And as I said, there are two models of supervision which is happening around the world. The one is, as I said, you do on-site examinations, part of the overall operational risk framework. But there are countries like India which has dedicated IT examinations. And again, there are many countries where you don't do a complete examination. We go every year when you come to banks, we look at the entire stack. Many countries look at specific areas, thematic kind of stuff. We're really not there at this point of time. But this is an area, unlike the traditional risk of traditional areas of credit, market risk, etc., where the lot of tools, inspection alone is not really going to help. Inspection possibly helps in the initial stages. As banks achieve maturity, as many of the banks have, we have a whole spectrum of banks. Banks who are right up there, banks in the middle, banks who really have to do a lot of catching up to do. Inspection still has a role to play. Inspection always will have a role to play. But as banks mature, you need to really augment and have other tools of supervision. And we also have an offsite supervision. We have a model called the K-risk indicator model, where we collect data from banks on a quarterly basis, and we have a model which provides a score at the aggregate level and certain disaggregated levels. I can see scores across a bank, across quarters, for a certain segment of banks. All that is there, and that has evolved over a period of time. But at the end of the day, our experience is that also has their usefulness is there, but that's not enough. We have also supplemented our supervisory activities through other means. For example, we conduct tabletop exercises across this. I think we've conducted the last 3 years. We conducted about 15 plus exercises across segments, not just for commercial banks, cooperative banks, NBFCs. These are mostly paper and pen exercises where you get an insight, you give a problem, give a set of problems which are kind of taken from the incidents which has happened, and then we get the responses, and then we evaluate the response, and then we give a feedback. And this was found to be especially useful for smaller banks, the urban banks, NBFCs. So we will now take this one step further. It will graduate from a simple paper pen type of exercise where we'll have a tool. We will go to a platform. We will simulate some of these scenarios, and we will ask you to respond in real time. And that will give a much better feel of the issues involved, so that learnings could be much more effective. As you know, we also do a cyber reconnaissance, a kind of an outside-in perspective from when an attacker looks and scans your IT assets and what kind of vulnerabilities they find. Some of you do it yourself, but we do it. We take a set of banks, do it, and then whatever we find in terms of vulnerabilities are shared with the banks for them to remediate. We do phishing simulation exercises. Most of you might be familiar, and this is found to be extremely useful for smaller banks. And surprisingly, some of the bigger banks also fared very badly in initial, and subsequently they improved. And we have graduated this exercise from just trying to assess the awareness of the employees to phishing mails, to looking at how your email security system responds, whether they were able to successful in blocking them, quarantining them, or whatever it is. So that's something, and we probably will do more such exercises, probably more sophisticated exercises going forward. But as I mentioned, exercises, or what should I say, activities which kind of mimic the tactics, techniques, and procedures employed by the threat actors in a real time, in a production environment, and how banks respond to such events, possibly give the best feedback or best insight into the capabilities of an entity as regards the cybersecurity is concerned. And that is where we are going as we go forward. So we have frameworks around the world which is called for example, the Tiber EU. It's a framework which is available, which is in the European Union. You have STAR, I suppose, in MAS, CBEST, the Bank of England. So basically, this framework provides for these. They provide a framework only. The regulator doesn't really directly get attached to it. MAS gets it done through the equivalent of IBA. The other central banks provide the framework, which provides for various actors. You have threat intelligence agencies, you have testing providers, you have scenarios which are bespoke, which are designed possibly in consultation with the regulator and the bank. Scenarios are designed, then you do the test run. It probably runs over a period of 6 months at the minimum. You do the test, you evaluate in the production system, you evaluate the results, and then the regulator and the entity sits together, come out with a remediation plan, and ensure that remediation is actually done. And this is possibly a framework to which we are going as we go forward, and possibly that is the need of the hour. But as I said, we have a wide spectrum of banks. We have banks, as I said, which are at the highest end of maturity, to banks which really needs a lot of hand holding. And one of the learnings we had is today, if you ask a bank, there is no depth of budgets. I mean, every bank knows it. But what we really understood is it's not enough to have just money. It is one thing to have money, but then it takes a lot more for a bank to scale the ladder of cybersecurity maturities in terms of skill sets, in terms of project management skills, environment, ecosystem. So that is one learning we have. And one of the important things I forgot to tell you is that the role of governance, the role we attach a lot of importance to the IT strategy committee, which is a subcommittee of the board. And one of the recent master direction where we have laid down the criteria for somebody to head this IT strategy committee, and also defined in terms of what should be the criteria for members of this committee. For what we really observed, because in many of the meetings we asked the strategy committee chairman and sometimes the members also to come, and more often it so happens, this happens mostly in public sector banks, and they have their own limitations, that oftentimes you have somebody as a member who has absolutely no idea about this area, who has no skill set. They may be good in other areas but not in this area. So essentially it becomes an executive driven committee, which is not what we want. We know there are some challenges with respect to public sector, because it's not always entirely in the hands of the banks as far as directors are concerned. So we are in talks with the government to amend the Banking Regulation Act to ensure this. The private sector, we really don't see a challenge. It's already happening. We have members with good skill set heading the strategy committee. Public sector banks, we have suggested some alternatives till such time the act issue is fixed. So that's just, by the way, I thought I would just point out. So I think these are some things I thought I would just convey to you. But I'm more interested in, I think I've spent a lot more time than I was allotted, right? But I would rather be interested in not many times that you get an opportunity like this. Given a choice, I would like to sit right through, because I saw some interesting sessions. But at my level, I don't know, because good or bad, my time is not my time. So, you really don't get time to update yourself. But I certainly would like this opportunity to get some feedback, questions, comments, or anything which you may, so that we can carry it and then probably work on that. Yeah, thank you. You can be very free. This is a very informal setting. It's not good. I hope you don't repress and others over here, right? You do? No, right? Yeah, right.
Good evening, sir. Thanks for taking out time. I have a question. I'm essentially from internal audit, work with JP Morgan Chase. My question is on, a couple of advisories that was issued beginning of the year, right? There was one advisory on, vendor change management audit that was required. Then there was one on secure development. Specifying internal audit to, do specific reviews around that. So just wanted to get your thoughts on, your expectation from internal audit, or should we expect more advisories where, internal audit needs to, while we have the IT master direction, which requires us to, review, perform a detailed audit, but should we be expecting, such advisories from time to time for periodic reviews or audits by internal audit?
Well, I would try to answer this question. Now, these advisories are maybe of two types which we issue. So one type of advisory is that when we see an incident somewhere in one institution, and there are some learnings from that institution in terms of the modus operandi used there, in terms of the control weaknesses observed there, then specific IOCs, etc., which are there, we share it across, so that that is effectively utilized by the entity, so that those kinds of incidents do not happen. That is one type of advisory. I think instantly we have issued very, very exhaustive advisory on ransomware attacks. I think last year, sometime in October, with different strains of ransomwares, the different issues, how they happen, what can be done to prevent them. So likewise, that is one type of advisory. The other type of advisory could be based on, those are not really advisory, those are alerts, basically based on intelligence which you obtain from CERT or any other sources. But on the advisories, what you've done, possibly you know that since the advisory is issued from time to time, and there is always a discretion involved in some advisories, right? It's not that everything should be implemented in toto. So what you've done is that we have consolidated all the advisories, and we are now issuing at the beginning of the year, what is it called? Advisory digest. We issue an advisory digest where we clearly say what are those action points which we expect to be mandatorily implemented, and what can be kind of good to have, best practice, which you can decide on your own. I think that would make a lot easier. That particular advisory digest would make the job of the internal audit function a lot easier vis-a-vis the RBI expectations. I think this is probably a demand from the banks. I don't know. We started this exercise 2 years back. This year also we have issued this advisory. I don't know whether I've acted, but specific to the internal audit, recently we had a internal audit is a challenging area. Internal IS audit, I'm talking about IS audit, is a challenging area in terms of skills, in terms of scope, in terms of the hierarchy, the way in which it is. For example, the findings go to the ACB. The ACB may not have the capability because their expertise lies elsewhere to look at IS audit reports. So we have given some suggestions there. But there was a internal group which has gone into the entire gamut of IS audit in banks. We had a couple of representatives from banks also, some outside experts also. We are working on the report. We probably can expect some kind of guidelines on IS audit so that together we can make this function much more effective, especially in the mid-size and smaller banks which do face a lot of issues there. I hope I've answered your question.
Thank you, sir.
Yes.
Excuse me. Hello.
Yeah.
I'm audible. So I got basically two questions. In morning there was a discussion on cloud security and all those things where still CISOs are
Just
not
keep
much,
your mic close.
still CISOs are not much comfortable moving all the data to cloud and all those things. RBI has come up with some guidelines on in IT outsourcing. Can we expect any detailed framework or any detailed directions on cloud security? That was one. Second thing is for DPDP, Data Privacy Protection Act that has come in. By when we can receive any specific guidelines or a framework to be implemented for banks? Because there is a lot of data that moves, customer data and PI data, card data, like PCI DSS has got specific standard guidelines. Similarly for data protection DPDP Act, can we expect any specific directions or framework from RBI?
Okay, so on the cloud security or cloud adoption in general, we have come out a very high level kind of regulation. But then we got a lot of requests from many banks whether they can provide more granular kind of guideline. We are looking into it. We'll see whether we should provide that kind of a very granular one at all, because there is an equal set of banks who probably are not very comfortable with those kinds of granular guidelines. So we will just see how we can address this. But what is the second question on? Yeah. So I forgot to mention that. I mean, that's one of the challenges I mentioned about AI adoption, and I did not talk about data privacy because there is an inherent, in my view, a conflict or contradiction in a sense that the AI uses a lot of data. Data is a raw material for the AI models, and but it's not necessarily in consonance with the requirements of data privacy, because that puts a lot of onus on all of us. So there is a problem. So But coming specifically to the DPDP Act, we have the law. We were expecting the rules. Initially, the government announced that it will come in the first week of January. It did not come. But now that the elections are over, the new government is in place. The new rules, we will see. It will be draft rules to start with, and then there will be comments, and then subsequently the rules will be finalized. As you know, this law itself is a very thin act. So we do expect a lot of things in the rules, right? So we have to await the rules. But notwithstanding that, we know what needs to be done, because banks obviously deal with personal data in electronic form. So there is this concept of significant data fiduciaries, and banks, of course, are going to be data fiduciaries. And there is this concept of significant data fiduciary, which is not really explained, which would be subject to higher order requirements in terms of separate data reporting, audits, all that. We really still don't know whether all banks will be significant data fiduciaries or all that. We don't know. But clearly, the onus is going to be very onerous on the banks as regards to data privacy. But if you look at the penalties of the data protection board is quite enormous. 250 crores. It can go up to 250 crores for one data breach. So that's the kind of penalties they talk about. So, but one thing is very clear, that the act may take its time. The granular details as to what constitutes data, that is also, if you see the definition of personal data is very broad. Any data with which you can identify an individual is personal data. That's it. But we all know generally what can constitute personal data. But I would say that from a bank's perspective, the ability to maybe classify data, the ability to discover data, and the ability and the need to have adequate tools and process and procedures to protect this data is extremely important, because one of the challenges we always find is the inability of the banks. And when I say banks, the challenge is also there. You also have to talk about your own other service providers with whom you have entrusted the data, and data is in their premises. That also you are responsible for. So you don't have, oftentimes you struggle to have a complete view of this personal data, where all they reside. They may reside in the application, they may reside in databases, they may reside in logs. Unless you have visibility of or understanding of where data resides, there's no way you can design controls in place. So I guess, I know most of the major banks started work in terms of appropriate policy for data classification, investing in data discovery tools, designing controls. So notwithstanding the fact that the rules will come, it will take some time. We need to start now. I hope most of you have started, so that as and when this becomes clear, we are there. So that's all I would say at this point of time. Yes. I hope to some extent I have answered this question. Yes.
Hello. Sir, I have a query related to Daksh portal. So we have all seen tremendous improvisation in the portal since the time it has we have started using it. Is there any plan in terms of further reducing efforts in terms of having bulk uploads available, especially for the lengthy quarterly and periodic submissions?
I didn't get it. What did you say? Further?
Bulk upload facilities where the lengthy submissions can be.
This is something to tell you frankly, this facility is there. We have not enabled because because we don't want this data to go out. If you probably have a bulk Excel file somewhere and upload it, you really can. I have no control over those, especially when it comes to compliance. If you're talking specifically in terms of compliance, to the RBI inspection reports, etc. I will provide the bulk upload where RBI asks for some ad hoc data from you, and you possibly you get it in Excel and you can upload. That facility will provide. But when it comes to providing compliance to action points, we are really not in favor of providing that facility. But I can tell you that we are started. I think we already have 1 or 2 hands-on sessions for the CCOs of banks on Daksh portal. We had one such about 15-20 because we also need terminals in our College of Agricultural Banking, Pune. We're going to have many more sessions going forward where you will be introduced, you will have hands-on experience, where you can also give your suggestions for further refining improvement, so that wherever feasible and wherever we think it adds value, we will certainly take care of them. Okay? Yeah. If there are no questions, then, or is there anything more? I suppose that's it. Thank you. Yeah.
Thank you, sir, for sharing your valuable insights. I'm sure that the entire ecosystem is going to be benefited by this. May I now invite and request Shri Sunil Mehta, sir, Chief Executive IBA, to share his perspective.
We all have heard Mr. T.K. Rajan giving a very detailed perspective, regulator's perspective on regulatory requirements and supervisory perspective, which will really facilitate us in understanding the compliance requirements. And the deliberations have really effectively narrated the international story. What's happening in Singapore, 1 hour reporting time for incidents, 2 hours for England, and then 6 hours for us. That gives us a room for improvement. Like, yes, we are there, but we have miles to go to reach that level. And unless and until the speed is maintained, I think it will be very difficult to prevent the fraud, because fraud will happen. We may have reporting, we may have follow-up, but we may not be able. This is a golden time in which it is reported and it is can be stopped. It's going down to the other banks, because usually fraud happens. The funds move from one account to the other account, to the one institution to the another institution, sometimes to the retailer or sometimes to the e-service provider. So if it is timely reported, at least the fund flow can be stopped at a particular point of time. And for information of all of you, I think IBA collectively, with the collective wisdom of the bankers, we are working on a SOP to find out a way how to stop the percolation of these funds, the fraudulent and cybersecurity proceeds, the crime proceeds, and how do we retain them in the banking system so that we can bring it back to the actual beneficiary or actual owner of that fund. Mr. Rajan also was very patient in replying to all the questions, and I think people were short of asking questions, but he was full of the answers. And that's really appreciated. A round of applause for him. The value of an Sumit goes up when the regulator participates and they give perspective, and the SEWA portal, which was launched, and Mr. Girdhar has elaborately explained about this urgency, the context. This is bringing down to the old concept. The consumer is the king, and this process will empower the consumer. The way the account aggregator framework will facilitate a person in borrowing, that yes, he has got various options, he can look at the various rate of interest and can choose any bank for going for credit. Similarly, for digital efficiencies, I think it creates a competition among the players, how well they maintain their system, because now a consumer will be able to see by a click of a mouse the availability of a service that will facilitate him in not wasting time on that particular channel, and attempting for that. Giving them the choice of a bank also, because where the downtime is less and the probability of his doing a successful transactions are more, that will empower him to make a better choices. This will create a better transparency within our bank, and it will provide a lot of MIS for us. Why it is MIS? We know about our bank. But then it creates a benchmark. If X bank can do a downtime of 99% availability or 98%, why Y bank cannot do at least 90% or 95%? So it provides a roadmap that yes, this is what can be done because my other peers are doing into it. This is not something mission impossible. So if they can do it, why can't we do it? So it will bring in more efficiency in terms of availability, in terms of speed, in terms of efficiency of our digital transactions and digital channels. All these initiatives are an indicator for all of our bankers. It's an era of transparency. It's an era of speed. The new generation customers don't have patience to wait. They will not come to the bank 3 times for taking a passbook. They will not come to the bank, which used to happen. I've seen with the banking system. They will not wait for 2 days for opening of an account. They will not wait for infinite time for sanctioning of a loan. They want everything with a speed. So when banking services expectation of a customer is going with the speed, I think the cyber security cannot be left behind, because this is the driver. This is the driver which provides protection to the consumer. This provides protection to the bank, because ultimately we are dealing with public money, and if it is not properly protected, we can lose the confidence of not only of the customer but of the ecosystem. I think both the initiative, the SEWA initiative of RBI is a welcome step for the entire banking industry for bringing our introspection, improvement, and improving our customer efficiency, besides providing choice to the customer. Thanks to the RBI for this initiative and especially involving us in undertaking this journey. I must appreciate the efforts done by the first phase of the SEWA bankers who are present here. At least they were first to be prepared and ready to launch. A round of applause for them. In such a short time, because I know the idea is not very old. Recently this was conceived. And bankers preparedness is going for a first round of launch where the proof of concept can be tested and the sustained improvement in the portal can be brought in. That's really a great achievement. I hope that will provide a message to all other fellow bankers that, okay, we have to catch up shortly so that all the banks can be onboarded on this portal in the interest of everybody. I'm sure today's deliberation and listening to the perspective of the regulators, giving the clarity on various aspects, including the DPDP, because yes, the rules are under the framing and we have a lot of apprehensions, and at least that we're providing a guide rails under which we can operate our IT systems. So this is what is ahead of us. We have to gear up, and today's conference must have provided a food for thought for preparedness. And I'm really thankful for RBI for giving us this opportunity, and to all my member banks present here who took it so seriously, participated in whole number, and came out forward to make this a reality in the shortest possible time. Thank you all to our sponsors, and thank you all to our knowledge partner for facilitating us today. Really, it was a great contribution from all of you for making this summit an important event. I'll be failing in my duty if I do not say that our IT department headed by Mr. Srinivas Rao had to go for a burning of the midnight oil to see that this conference is organized in time. I think it was a quick movement. There will be some learnings for future. So team IBA which participated in conducting this deserves that appreciation. And one thing I would like to suggest to all of you is, yes, it's not a regulatory initiative. It's a banker's own initiative. That's why IBA has been chosen to partner it. So my request to all of you is, whatsoever you can think will be in the best interest of the ecosystem in bringing more improvement in the portal, additions needed, alterations needed, you're free to give your suggestions. We'll process it and we'll discuss it with the RBI and see that we make the best use of this effort. It's not only just a regulatory requirement, this becomes a real information utility for all of us. Thank you all for your presence.
Thank you, sir, for your profound perspective.